Hi everyone, this is the start of a new series that I'm really excited about called Q&A with Wall Street. So as you might know, every publicly traded company typically reports quarterly earnings results and then has a question and answer session with Wall Street analysts. This series is going to go through those Q&A sessions and I'm going to start with Sofi Stock. So let's get right into it. The first question here asks about SoFi's growth in members. And Anthony Noto, the CEO of SoFi, says that they're really trying to target high quality members and they're targeting 400,000 net new member adds per quarter. They've been trending a little bit above that recently, but the goal is to add 400,000 net new members per quarter. Interesting. The next question asks about student loan changes. As you might know, the federal government in the US has paused student loan payments, so borrowers have not needed to pay back loans. That's been a headwind for SoFi stock that deals with student loans, and that's expected to end at the end of 2022. And so this analyst wants to know about the changes and how that's going to impact its business. And so again, the CEO takes this question and says that we think that the addressable market for student loan refinancing is quite large even with these changes. So even with the changes, which what the CEO is alluding to is the Biden administration is canceling up to $20,000 in debt each borrower. So that's going to reduce the total amount of debt outstanding in student loans. In fact, it's going to cause some folks who have borrowings to go to completely to zero. It's going to wipe out their debt completely. So this analyst is concerned how the reduction in overall loan balances could negatively impact SoFi's business. And the CEO is saying that even with the changes, we still think the student loan market for refinancing is quite large. The next question comes from Dan Dolive with Mizuho Securities, and Dan wants to know about CAC trends. CAC stands for Customer Acquisition Costs. In other words, Dan wants to know how much it's costing SoFi to acquire customers. And the CFO, Christopher Lapointe, takes this question and says, if you were to look at Q3 22, you'll see that our sales and marketing as a percentage of revenue decreased 400 basis points year over year and 200 basis points quarter over quarter. When determining how much we're willing to spend to acquire a member on a day-to-day basis, we're looking at a host of different factors. We're looking at lifetime value that a member could achieve. I'm going to pause here and say that this is the point where it's risky for investing in growth stocks because of this calculation. Management of growth companies typically likes to look at a customer in terms of their lifetime value that they could potentially bring to a company. So they look at a customer and say, not just, oh, this customer, we're going to make $20 from this customer this year. They say to themselves, oh, we're going to make $20 from this customer this year, but this customer might stay with us for 5, 10, 15 years. And so the lifetime value is, let's say, 15 times the $20. So the lifetime value of this customer is $300. So we might be willing to spend $100 to acquire this customer. That's just a hypothetical example. And some other growth companies have gotten into trouble for this kind of calculation, for looking at the long-term value of a customer and then spending too much to acquire that customer. So this is something to keep an eye out for as an investor. Growth companies tend to overestimate this long-term value of customers. What we've observed recently over the course of the last few quarters is that our overall long-term value of financial services members has increased as a result of having the bank and focus on growing direct deposit members. So what the CFO is saying is, oh, now that we have a bank, the long-term value of the customer has actually increased. So they've raised the long-term value of the customer, and you can you can rest assured that that means they're willing to raise the price that they're willing to pay to acquire the customer. So they're willing to pay more in sales and marketing expenses to acquire customers. And this is the CFO justifying the rising customer acquisition cost, saying that, oh, it's because the long-term value is now higher, so now we can go out and spend more money to acquire customers. Yes, that might be true, but that remains to be seen from an investor's perspective, from a SoFi stock investor perspective. And yes, what that's done is given us additional flexibility on customer acquisition cost. In other words, we're going to spend more on customer acquisition cost is what additional flexibility means. Moving on, this analyst wants to know about SoFi money accounts that they added, pointing out that many of them were direct deposit and likely to be richer customers. And the CEO acknowledges that, saying that 50% of newly funded SoFi money accounts are setting up direct deposits by day 30, which is up from 37% in the second quarter. That's good news. For SoFi stock investors, you like to see depositors have direct deposits signed up because that means they're more sticky customers. They're going to stay longer term because it's going to be a hassle to change that whole direct deposit process from wherever the source is to change it to a new bank, right? So if they're signing up for direct deposit, they're likely to be a SoFi customer longer term. So that's good news. And the fact that this accelerated quarter over quarter is also good news for SoFi stock investors. And I will end with this final question from Michael Perito, asking, what's your appetite to continue to grow the bank balance sheet and drive higher NII? NII stands for net interest margin or net interest income. And so the CEO responds, we just haven't had a year in which all of our businesses have had the wind at their back, and that's possible in 2023. And I'm very aware of the current outlook for the economic environment, inflation, and interest rates. So the CEO is saying, like, we haven't really had a year where everything went in our favor. And, to be honest, there's rarely any business that has everything go in their favor for an entire year. So SoFi is not alone in that regard. And still saying that he's optimistic for 2023, even though that the macroeconomic environment doesn't look good with rising interest rates, which is certainly going to pressure their home loan segment, right? Less people are going to be interested in refinancing their homes and also purchasing a new home when mortgage rates are higher. Still, the CEO is optimistic, and he notes here that they're going to reinvest 70% of incremental revenue back into the business, and the other 30% they're going to allow to flow to the bottom line to hit their long-term goal of roughly 30% EBITDA margins. And so one way they're going to reinvest in the business is through paid marketing. Another way is virality of your products and partnerships. And so they're going to use all three of those methods to increase the reinvestment in their business. And again, the CEO notes that they're relatively small. They've barely scratched the surface in how big they can be. They've only got 4.5 million members is a lot, but for the CEO, that's only for their longer term prospects. And they have their sights set on high single digits and even double digit members after that on a very aggressive perspective. So, in other words, SoFi expects to grow at least double from where they are now, from 4.5 members to at least 10 million members longer term. But the manager is saying double digits. So double digits means at least 10, could be more. Their long-term goal could be higher, but at least 10 million. So a very long runway for growth here for SoFi stock investors. All right, so that's all I've got for this first installment with Q&A with Wall Street, starting off with SoFi stock. If you liked what you saw, please subscribe and you'll get the updates on the next stocks. And if you've got a recommendation on which company I should do next in this series of Q&A with Wall Street, let me know in the comments down below. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.